Chris, no doubts that we're still going to reach 29.50 by the end of the year, given this week's mayhem?
No doubts, and we actually think we'll probably get there in the next 3 to 6 months. We think the fundamentals are very, very strong, and what we think is there's just a massive demand for liquidity at this point in time and a very healthy repricing of risk.
What's going on this week? Are markets a little lost? Asia was down, Europe is struggling, the US is up, but we had a correction along the way.
Well, that's it. We had a correction. So what we had is a low volatility period for a long period of time, and you had people chasing funds and strategies that worked in that kind of environment. As volatility spiked, you had to have a repricing. And what we see, and often what we see, is when the US is down, Asia's down, Europe's down, it becomes a vicious cycle. And it takes a while for this to work itself out, but I think we're toward the end of that right now.
So it only took a few days. Wow. You talk about quantimental stocks. Is that a made-up word?
I didn't make it up. It is an actual real world. So it's a merger of quant and fundamental. It's not a really...
momentum.
and momentum. And it's not a really sexy word, but it is a real word. And what we like to do is we like to merge the two because there are good practices in both sides of the equation. And we think that makes for a very strong or healthy portfolio.
And Chris, you choose to utilize this 12 to 1 month price momentum factor. Why is that? There are two reasons.
Well, we think it's still a momentum market and has been a momentum market for a long period of time. The other thing is momentum, people worry about it because it's done really well. But at the end of the day, it's not excessively expensive. And the fundamentals of a lot of the momentum players are still quite strong. And the reason why we use 12 minus 1 month is we're looking for things that have been sold or traded down in the last month. We see that as an opportunity in a longer term trend.
Chris, you also say that this year is going to be a year of two halves. Just explain how the two halves of 2018 you think are going to play out.
Right. So what we think is the first half is going to be very positive. You're going to have EPS go higher, sentiment improve, M&A activity, and equities, I think from here, actually start to walk up relatively aggressively. In the second half, what you have to deal with is a Fed that's tightening monetary policy. That's in the thick of things. And generally, when they're late in the cycle, what we see is a peaking of EPS growth, a peaking of the ISM, a flattening of the yield curve, and EPS multiples contracting. And that's a less positive environment for equities.